Thanks for tuning into this earnings conversation with the management of RK Forgings. Mr. Naresh Jalan, who's the head honcho of the company, joins us right now with his thoughts on not just how the quarter or the year has gone by, but also setting sights on the next 3 or 4 years, because they are doing a bunch of things which might all come to fruition piecemeal consistently over the next few years. And important to understand the perspective from him about how does he see this. Mr. Jalan, great having you. Thanks for joining in. I'll start off with the quarter first. A 24% revenue growth is a decent performance under the circumstances. Did it meet up to your expectations? Because it certainly met the analyst expectations.
Good morning, Neeraj. I think the overall FY23 has been very satisfactory for us. And we have been, as we had projected, we have done well, both in terms of top line volume growth as well as mix change, which we always wanted, from shifting a single customer model to a diversified model. Overall, we have done a good job in FY22.
On volumes versus pricing, because the pricing element will also be a factor of what could happen ahead. I saw volume growth in quarter 4 was about 14%, leading to a 25% revenue growth. So I'm guessing the price mix uptick was about 10-11% aggregate. How are client conversations currently with regards to the kind of pricing that you would have on fresh orders? And is the commodity cost coming down a factor which could lead to a reduction in prices as well in FY24?
I think we have not yet seen commodity prices softening. I think both in terms of North America and Europe, we see a much better stable regime right now in terms of commodities. And we expect this to continue over the year. And I think in terms of volumes, we are pretty hopeful that we will still be able to maintain a 10 to 12, 15% growth in terms of volume going forward. And in terms of revenue, I think it's a mix of raw material pricing versus. So we feel that it should continue at the current levels. Then I think I am very hopeful that if raw material prices do not change, things will look much better.
So is the export mix giving you this uptick? Because I thought exports, I'm citing quarter 4 and not the whole year, Mr. Jalan, excuse me for that, but a 32% YOY increase, if I'm not wrong, in quarter 4 on sales volume on the export side. That was a powerful performance. At a point of time when the West seems to be in a bit of a recessionary wave, how do you see FY24 from an export market perspective?
I think we'll continue to grow in export markets. Both, actually, we have added a lot of geographies as well as new customers globally. So all taken together, a lot of customers we are starting from a base zero, and a lot of geographies we are starting from a base zero. So I think all taken together, cumulatively, in terms of exports, we will continue to see the growth what we see over last 2 years. And I think new customers will bring in new opportunities for us, as well as the existing customers are also adding new portfolios to the overall business. So we don't think that overall in terms of tonnage or in terms of volumes, things are going to shrink. While we see that the overall portfolio of exports will continue to expand with our growth plans and the new investments which we have made.
Okay. Mr. Jalan, just one quick word. When I had spoken to your CFO, I think in the month of January, there was a belief that even if the West is in the midst of a slowdown, the replacement demand of CVs would be very high in calendar year 23, and that would ensure strong growth for businesses such as yours. Are you experiencing that either in the first quarter or in the conversations with your clients for the rest of the year?
I think in the conversations with our clients right now and the overall projections which we have from our clients, based on that only our CFO had given that statement.
Right.
And we still are of the belief that calendar year 23 or FY24 for RKFL, it would be a very strong year going forward.
Okay. You have some capacities coming on stream. If I'm not wrong, on the call, you had mentioned that some piece in June, some piece in September. Even if I assume not full capacity utilizations, but modest because it's the start of capacities, there seems to be a leg up year of sorts to FY24. by virtue of these added capacities coming on stream? Fair assessment?
Yes, we obviously are looking at leg up from these capacities. These are pretty new technology capacities which are coming up, and basically these are in warm and cold forging. So this once this capacity start and once we are able to clock the volumes from this is going to bring both bottom line and top line into higher trajectory model of RKFL. And with the ambitions which RKFL nourishes right now, I think this is going to be one of the milestones in terms of going into the next league of automotive component chain.
So, Mr. Jalan, pray tell me, and I'll save the railway wheels project for the last question. But before that, you have capacities coming on stream. You entered into oil and gas in the Middle East. Your business on the West seems to be doing okay. There is also an EV acquisition that you've done, which will add some revenues, small as they may be. Would it be fair to assume, I mean, what's the kind of growth that you envisage for FY24? And would it be fair to assume that for the next 2 or 3 years, incrementally, you have something or the other coming up, which adds to the performance of your firm in a decent fashion and helps you grow at a good clip, CAGR, for the next 2 or 3 years at least?
I think, as you rightly said, we have our hands full right now with it's not only the EV acquisitions, two acquisitions which we have made through NCLT and which we expect to get a closure by the mid of this year. So I think a lot of things are happening around the company, and we feel that next 2 to 3 years are going to be pretty exciting with both addition in terms of capacities, in terms of greenfield, brownfield, and new technology, as well as the acquisitions getting closed. So overall, what we feel that at least we should be growing in terms of volume, not less than 10 to 15% every year, given what the market conditions are right now and what is being projected. We are of the firm believe that next 3 years are going to be extremely exciting at our PFM.
In which case, I would presume that if you grow at a 10 to 15% volume clip, one can expect, by virtue of internal efficiencies, maybe better raw material management and otherwise, and some pricing, a CAGR run rate between 15 and 20%, 3 years on a trot?
It should be. It's a vision which RKFL nourishes right now. I would not like to put a number to it, but obviously at RKFL, we have a vision to be a 5,000 crore company by FY25. So we are working backwards towards that. And we are pretty hopeful that we will do much better than the industry as a whole going forward for next 3 years.
So because the street was wondering why is it that the current presentation doesn't have that mention of 5,000 crores, your last answer kind of puts that into perspective. It may not be in the presentation, but you're still looking at that 5,000 crore number.
No, yes, we avoided that number basically because of the commodity pricing fluctuating so much. So we believe that we would not like to commit to a number based on what commodities may change overnight. So it may happen that the commodities may go up drastically in this year and we may end up doing much faster than what we believe. So we did not want to put any number to it, but we still have a vision and we are nourishing that well, and we are working internally with the acquisitions and other things already in place. We firmly believe that we are on target to achieve those numbers.
Got it. My final question, Mr. Jalan. You won a landmark order of sorts in the JV with Titagarh. Now, Umesh Chaudhary was very constructive with the prospects of the kind of work that this project could throw up for both the companies. Some words on that, because we haven't had a chance to speak to you on that. Part one. And part two, are you pursuing more such work? Because the quantum of railway orders seem to be very, very strong currently for all parties involved.
I think railway happens to be one of our biggest driver going forward. And I think this wheel is only a part of or maybe you can say a slice of the entire cake. Titagarh and RKFL together have a long ambition of nourishing together huge cross-selling opportunities, and both the companies are already working towards utilizing each other's capex and not putting in fresh capex and utilizing the available resource already for the existing portfolios both of us have. And that itself will bring a lot of opportunities within both the companies to grow on the current portfolios. In terms of the wheel project, I think Railway has bought a capacity of 40% of what we envisage to put up. We are putting up a capacity of more than 2 lakh wheels per annum, and I think first 500 sets of wheels which we are supposed to supply to railways are going to get into production in the last quarter of 2020 FY26. So obviously, with that coming in, we are looking at a huge opportunity both within India and globally in terms of supplies of wheels. This is going to be only start. I think we are looking at manufacturing together entire wheel set assembly, and I think railway brings in immense opportunities. And the both companies at the management level and as well as the working relationship level are already working on a lot of projects together to bring railway as a common portfolio for both of companies.
Just one last question, Mr. Jalan, and I'm not asking you for exact numbers because it's difficult to put numbers to this. But can you help us imagine what's the kind of opportunity can such a thing throw up? Because I heard your answer speak about this being just a slice of the cake. So can you help us imagine what something like this could be like for you, let's say 5 years out, in terms of the kind of orders that you could win, the geographies that you can bag these from, and what nature of orders could these be?
No, I think we are yet to come out with a number, but yes, obviously we are working with Titagarh on the orders won by them on what they supply the undercarriage for them, as well as their current portfolio of wagons. We are working with them. So there are a lot of opportunities which both the companies either had to put capex separately, and now with the joint venture and the relationship growing, I don't think there is any need for any fresh capex on the either side, and we can use each other's asset to grow manifolds in terms of the portfolios we already each other have, and that's the opportunity both in metro car as well as the Vande Bharat car, as well as wheels and wheel sets. All taken together, we are working in on the entire platforms with each other's skill set to utilize, and I think it can throw up a huge opportunity going forward. So we are not putting the numbers right now. As the day go by, I think numbers are going to come out very soon.
Okay. Well, we wish you all the best for a successful FY24 at the very least, Mr. Jalan. Lovely talking to you, and all the best for the quarters ahead.
Thank you. Thank you.
And viewers, thanks for tuning into this conversation.